The markets are on edge. We had a huge sell-off the last week, actually the worst series of days in a very long time since the tariff scare. And everyone is asking the question, are we in an AI bubble? And is this the big crash that pops this giant bubble? And I had some videos out on that, but today is the day of all days. Today is NVIDIA earnings. And NVIDIA is the centerpiece of this entire AI market. And everyone is looking at NVIDIA. And this afternoon is the first of two important events that will determine if we have a huge year-end rally or if we are going into a sad bear market and it's all over. So in this video, we are going to look at NVIDIA earnings expectations and what the market might think about it to draw our conclusions. What is best to do? The consensus, of course, is that NVIDIA is going to deliver another great earnings call. Demand supply NVIDIA chips 12-1, says Dan Ives. We can take a quick look into what Dan has to say here on CNBC.
After being there 3 weeks, demand to supply for NVIDIA chips is 12-1. So it comes down to there's one chip.
12 people in order for every one potential chip that exists to order.
So there's one chip in the world fueling the AI revolution. And that's why it speaks to our view that anyone that talks, and Gene and I talk about it all the time, anyone talks about an AI bubble here, we are in the third inning of where this is all playing out. And I think that's why this is an inflection point. You're going to see ultimately what the demand looks like from Jensen himself. And I view it as a bullish catalyst for tech stocks.
Here's the worry, though. Again, not a tech expert like you guys, but I do know also that technology changes. It evolves. And I think, Gene, if I was, now I guess I have to play the role of the bear-ish, right? Mm-hmm. If I was going to be the bear, I would say that what if somebody else comes out with a much better chip and all of a sudden NVIDIA's chips aren't as good as they are right now?
And here we are going to stop because that is actually not the question that we are interested in. The two bulls, Gene Munster and Dan Ives, two very sophisticated tech analysts, they both say, dude, NVIDIA is going to kill it. It's pretty obvious that the demand is 12-1 for every chip NVIDIA produces. That's what Dan said. There are 12 chips they could sell. The demand outstrips supply 12-1. We should not be concerned about a great outlook. It's all about, can they ramp up production even more and more and more? And is there any limit to it? So it's an enormous bull market. And here the CNBC anchor now goes into, but can NVIDIA get hurt by a competitor? And so on. Of course, these are NVIDIA risks, but these are not market risks. Of course, they're competitors. I doubt anyone can be dangerous for NVIDIA anytime soon, but that's actually happening. So we see that the analysts are super bullish on the whole situation. I'm pretty sure NVIDIA is going to have blowout earnings, but what does it all mean? We will see. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. I will show you one more example of another bullish event. Here we have the announcement of a deal just very recently, yesterday.
Their big AI deal. This one is involving Anthropic, Microsoft, and NVIDIA. So let me tell you what's going on here with all the numbers. Anthropic is saying it's going to spend $30 billion in compute from Microsoft. That would obviously be through the Azure service, and NVIDIA obviously through their GPUs and chips. And they're going to contract up to 1 gigabyte of compute power on top of that. Also, on top of that,
Gigabyte? I don't think so. Gigawatt. He meant gigawatt.
Deal that Anthropic is committing to. NVIDIA and Microsoft are going to be investing in Anthropic, with NVIDIA saying they're going to invest up to $10 billion, Microsoft up to $5 billion. Now, no details on what that up to exactly means and what sort of performance metrics or what have you Anthropic needs to meet in order to attract that investment. But very significant here because, of course, Microsoft is the primary backer of Anthropic's biggest rival, OpenAI. So now we're seeing Microsoft starting to not only open up its computing platform to these other AI companies and AI models, which it's been doing for some time, but also investing in these rivals to OpenAI. This is a very significant moment with respect to that. And also, we should just talk about these Anthropic models are now going to be hosted on Azure. They've already had some limited partnership going on here between Anthropic and Microsoft. Now the latest and greatest models are going to be available through Microsoft's Azure Cloud Services, whether that's for developers and things like that, presumably also making their way into more Microsoft products. Now, guys, I'm out here in San Francisco because it's the Microsoft Ignite conference, and I'm going to be talking during Power Lunch with Microsoft's new commercial CEO, Judson Althoff, about this new deal, about all of that, and about how they're going to be leveraging some of these new technologies into their Copilot products, guys.
So this is a super exciting deal. I'm just going to play this here as a little B-roll. We'll mute the three super dudes here who talk about this deal, why I explain why is this so important. So we see here that they're actually discussing that. And this is the CEO of Microsoft, Satya Nadella. And then we have Jensen Huang, of course. And we have the CEO of Anthropic here, Amadei. And why is this so important? So these three are now pairing up. And you probably know that this is already something that NVIDIA, we observed with NVIDIA, that NVIDIA is investing in all these different companies. They are taking shares in Grok, in Elon's super AI company. They already did a deal with OpenAI to also take up to $100 billion in investments into OpenAI. So they own Grok pieces, they own OpenAI pieces, and now they also own Anthropic pieces. These are the three biggest AI players outside Google, of course. Microsoft has, of course, their own AI unit and develops their own models. But now they are also investing in Anthropic together with NVIDIA. NVIDIA 10 billion, Microsoft 5 billion. And Microsoft and NVIDIA are in bed with each other. So what you're seeing is that NVIDIA is at the center of this AI revolution. They are stretching their little greedy tentacles out into all the hyperscalers, right? They're deploying these GPUs into Elon's companies, into Microsoft, into Google, of course, into Oracle. They are also striking deals with the frontier model companies that also use Microsoft, Google, and Amazon and everyone, but also build out their own compute. So everyone is in bed with everyone at the same time. It's like a giant capitalist orgy, trillion-dollar orgy of all these dudes. No girls involved. Oh, Lisa Su is involved. One girl. And that's the situation here. And why is that not incestuous, circle capitalism, but actually full of substance here? We have to understand these are the best operators in the world. These are not beginners. These are not little scam artists. This is Jensen Huang, who has done this for decades and decades. It's Elon Musk, has done it for decades and decades. It's Satya Nadella, probably the best corporate CEO outside the founders in the world. So these are absolute top players who do that. They have very sophisticated, very stringent financial guidelines internally. These are top-notch operators. And you know that I'm not watching kindly upon failure. These are not failures. These are successes. So when they do the investments, and Jensen Huang of NVIDIA made this very clear, they are assessing each investment as its own opportunity. He has a tremendous track record of great investments, by the way. So this all makes a ton of sense. And this latest deal from yesterday just shows you how bullish this whole thing is. And the market, who wanted to have this phony sell-off, says it's an AI bubble because it sounds good and it's really not smart. No expert agrees that this is a bubble. All the experts say this is definitely not a bubble. 12-to-1 chip demand. There is zero dark fiber, the equivalent of dark fiber. Every single GPU sold is more than utilized to 100%. The revenue growth is through the roof. Behind the scenes, profit growth is exploding because of AI. Everyone gets fired right now, which drives up profits even more. The idea that this is a bubble is dumb. And the market starts to understand that. So I am convinced that NVIDIA will deliver outstanding numbers. And we have to now think about, from a share perspective and stock market perspective, this is not just about NVIDIA shares. NVIDIA is the eye of the storm. That includes Tesla will be affected, Microsoft, all the hyperscalers, everyone, NASDAQ will be affected by how the market reacts to NVIDIA. So what is going on? I have another clip here. I skipped that. There is some investors are concerned. We can have a quick look if you guys want. What do these people say here? These are the skeptics. Let's take a look what they say.
Today, analysts are expecting the company to post an EPS of $1.25 per share on $55 billion in sales, which would mark an increase of 56% year on year. When it comes to order numbers, these will also be in focus, particularly after the CEO, Jensen Huang, surprised the market last month, revealing that NVIDIA had $500 billion worth of orders for this and next year combined. Now, investors will also be watching out for any commentary on sales in China after Huang made a deal with the President, Donald Trump, to obtain export licenses.
So let that sink in just as a commentary. $500 billion in orders. 2026 sales forecast is 286 billion. It's pretty clear they're going to exceed that, in my opinion, which is nuts. Just let that sink in. They will hit 300 billion or something in sales. So if he says they have $500 billion in sales this year, next year, of course, much bigger than this year, this number is too low. So that's good. We're probably going to beat it. Of course, no one knows what the actual market expectations on Wall Street are. They're definitely higher than this. So they could be disappointed. But you see where the journey is going. It's going up.
In exchange for sharing 15% of the revenue with the US government. But there's more. Other things in focus include deal making. Earlier in October, NVIDIA took a $1 billion stake in Nokia, which would allow it to integrate its GPUs into the telco's cellular network hardware. The company also pledged to invest $10 billion in OpenAI, as well as $5 billion in former rival Intel. And this comes after a survey by Bank of America suggested that a majority of global fund managers think companies are over-investing into AI.
Wait, let me just comment quickly on the deals. You hear that the Anthropic deal of $10 billion is not even mentioned here because that was too new for these guys. They already missed it. 1 billion in Nokia. Then they had 2 billion, I think, in Intel and 5 billion. I already forgot into what. So you hear there are deals all over the place. NVIDIA places strategic bets from cell phone towers all the way to competitors like Intel. They're taking stakes. So they are on a run, and that is also a bullish sign. But let's go back now into the dummies. Now comes the dummies. See what she says. Let's
managers think companies are over-investing into AI. More than 50% of the fund managers surveyed believe that AI stocks were already in a bubble. And it comes after Barclays estimated that AI-related investments by both hyperscalers and smaller companies could reach the equivalent, listen to it, of 10% of US GDP in the next 4 years. So we're talking about unprecedented numbers here. Let's discuss some of these market developments with our next guest. Richard Kelly, head of global strategy at TD Securities, is joining us this morning. Richard, great to have you on the show. I'll start the conversation by getting your thoughts on these ongoing concerns around AI valuations. What do you make of that?
I mean, there's certainly a large chunk of financing that's been going on. There's certainly a large share of the investment growth that's been going through over the last couple of years. That's built up. And this is where if you start extrapolating things out many years in the future with no changes, you can see something go through there. But I think if you just look at the GDP numbers themselves, we don't find much accounting that the AI investment that's going on is driving a significant share of actual GDP growth. For one, you get a large part of imported content. For another, if you look at the crowding out that's going across other investment, this is an investment that's happening on top of everything else that would be happening otherwise. It's crowding out a decent share of that investment. So I think at an aggregate level within the economy, it's not having that large of an impact yet. And a lot of the potential comes from productivity growth. And that's something that's going to come much further in the future as well. So I think this is one that there's certainly concerns to look at the structure and how the funding looks like within the market side of things. But I think some of the discussions when we try and extrapolate into the economy right here is a little bit overblown.
So that's when it comes to potential economic ramifications here. But if you focus on the markets for a moment, there seems to be two schools of thought. One suggesting that the sell-off we have witnessed is different from the ones we have witnessed in the past and are just the start of a broader concern in terms of the outlook for AI. And the other school of thought suggests that this is just a healthy correction. In which camp are you on at this stage?
I think if you look at it more fundamentally, I mean, we look at it from the data. And obviously, one issue we've had for the last month and a half, for 2 months, is we haven't actually had any data to anchor expectations. So we've had to look for other things in markets to try and see what's going on. We've had to look at alternative data going through. If you actually look at macro consensus, you actually look at data surprises, and you see where equities have traded, you have seen a divorced move. You have seen equities trading well above the data we were getting, but we know we were missing the data that markets want to go through. So I think there's been some front running of what sort of strength there is. And I think over the next couple months, as we see the backlog of US data come through at the very least, I think that gives you a sense, unless this data can surprise significantly.
Blah, blah, blah. So there you have it. These are the usual suspects, blah, blahing around, not knowing what they're saying. Some say, oh, it's overinvested. Over 50% of institutional fund managers say the CapEx of Satya Nadella, of Google, of Elon, of NVIDIA, Sam Altman of Zuckerberg is overblown, overdone. They don't know what they're doing. Okay, guess who is smarter? These super killer dudes, Jeff Bezos, Elon Musk, and Satya Nadella, and Zuckerberg, or a bunch of dummies who are institutional fund managers? I wonder who understands better how to do CapEx, Elon or a bunch of complete dummies. So I think here we have a very clear instance where the fund managers have no clue what they're talking about. And the real operators, the best operators in the world, doing CapEx, the one thing they do best, because these are not little beginners. These are the biggest pros in the freaking world. So the idea that the Mag 7 and the other guys are overspending on AI is just completely dumb. Okay, that's pretty obvious. This is the biggest ROI and the fastest ROI we have ever seen. This is not internet style where you invest in all the fiber and then 10 years later you make money. Here you see very fast ROI cycles. It's pretty predictable what's going on. You see the fastest revenue ramps in history for Lovable, for OpenAI, for Anthropic, for all these, AI companies. And you already see Amazon firing everyone, rapidly improving profits that's coming in over the next quarter. So it's just delusional to think this is a bubble. Now, will the market understand that? We have some indications that the market is already tired of the sell-off, that they're already getting nervous and FOMO. Here, let's go to my predictions, what's actually going on with NVIDIA earnings. Here's my prediction. It is already clear to everyone that these earnings will be great. They will absolutely deliver. The markets will then have to decide how to spin these earnings. And what you observe as an experienced investors with these earnings, there are basically 3 scenarios for earnings seasons. The first scenario is what you would expect. People look at earnings, and sometimes earnings beat, the stock goes up. Sometimes earnings disappoint, the stock goes down. But that's only one of 3 scenarios. The second scenario is you're in a bull market. In a bull market, no one cares. You miss earnings, your stock goes up for whatever reason. They come up with arguments like, well, we like this one number, right? Yeah, they missed on everything, but this one thing they said, it's so bullish. So they're basically making it up. It's a Rorschach test. You see whatever you want to see. That's scenario 2. And scenario 3, it's a bear market. You can beat everything. And they find this one thing like, Jensen, yeah, sure, they beat on all the numbers, but Jensen was sweating. We don't like it. Is he nervous? Sell the stock. And how do you know you're in scenario 2 or 3? You know it because you see across the board that after every earnings, most of the earnings, the stock drops independent of what they report, or the stock goes up independent of what they report. I think we are in such a situation that they will become irrational, and this is a Rorschach test. So the real question is not what the earnings will be of NVIDIA. The real question is, what does the market want? Does the market want to rally now after NVIDIA earnings, or do they want to drop? That is the real question, especially given that there will not be many surprises in the NVIDIA earnings. NVIDIA will just blow it out of the water, will be great, and then markets will decide. Okay? In order to determine what the most likely outcome will be, we can look at the usual indicators. I had a video on Monday about this. We see the market is pretty bullish. It is super afraid. When fear is all around, the market wants to go up, right? Because everyone already sold, they're scared. Of course, 13 is not the most extreme. We saw 4 at the tariff Liberation Day shock, but 4 is a little unusual. So 13 already tells you this looks pretty bullish to me. And when you look at the VIX, let's take a look at the VIX. What this thing is doing, well, it is a little bit down. It's up 26% over 5 days. So it was at 18 and then peaked around 25 yesterday. 25 is a good number. That gets into the territory of fear. 22.91, well, it's not perfect, but I think the market is already preparing to go up. Let's take a look quickly what NVIDIA is doing pre-earnings, a few hours to earnings, and NVIDIA is up a lot. So you see where the journey is going. You see where it's going. If you look at Tesla, for example, Tesla is up a little bit. And then, of course, my favorites, let's look at MicroStrategy and the treasury companies. They are all the way down after going up dramatically yesterday. So that was a weird blip. They were down here and suddenly rallied like crazy yesterday, and now they're giving up the gains from yesterday. So there's no signal in the treasury companies. Maybe this is because Bitcoin is doing badly. Let's take a look at the cryptocurrencies. What's the latest? Yes, that's in euros. Ugh, annoying. But this is down 2.7. Ether is down 4.2. So it's not great. Maybe that explains it. So I don't see any signal in the treasury companies, cryptos, whatever. Not too bad, but also not great. But on Tesla and on NVIDIA, this looks pretty good. So my interpretation of this whole situation is the market is exhausted from the selling. Strategically, we know it's phony. And we know December 9th is coming up, where my take is very clear. The economy, especially unemployment, is in total shambles. Rents are going down. They're down year on year, shelter costs, which hits the CPI. 33% of CPI is housing. So the Fed would be completely nuts to not cut. If they don't cut, it's basically sabotaging the US economy at this point. So that is in 2 weeks. And that, in my opinion, will initiate the year-end rally. I'm pretty bullish because we are in this enormous transformative phase of AI build-out, that this is bullish and the market has already overdone it, in my opinion, given all the stuff that is coming. So my take is this Rorschach test tonight will end with some form of rally. I think we have two scenarios here. We have scenario one, they don't like it, they want to sell, there's a final violent flush. It's like, oh my God, panic. This panic after the earnings will not last very long, right? So we might see a violent flush tomorrow and Friday. That's scenario one. I don't think that will happen, but it could happen. But if it happens, we end the sell-off, I think, next week. Scenario two, more likely, the whole thing is over, the sell-off. NVIDIA doesn't move much or it goes up. And then I think we're good to go. Maybe we hang around here and wait for December 9th for the Fed meeting, but then we should be good to go. So I'm clearly bullish. Let's see, you never know. Markets can always go crazy. I'm assuming no bad event, of course, no black swan event. But in general, this does not smell to me like a giant sell-off is going to continue because the macro trends, liquidity, and Fed and AI tailwinds are too strong. Let's see what happens. I'm positioning myself cautiously. I'm still not on margin. I think it's still a risk I don't want to take, but I'm positioned for a run-up without taking too much risk. Let's see what happens. That's why we are discussing these things in Pioneerlands. Go to pioneerlands.net. It's free. You meet a bunch of great people. We have nearly 4,000 members now. We are discussing the future of AI, of capital, of investments, but also of building a greater civilization here based on all these immense new opportunities. Someone has to use all the inference compute. We do that to understand how the future will look like and to engineer it. That's why I'm also so bullish on AI, because we are heavy users of AI. I hope that was helpful. Take care. See you tomorrow. And let's see what this afternoon brings us. Until then.